for investors, obviously, buying gold on the market makes sense. There's not much risk there. It seems central banks are jumping on that trade. And I want to take a step back and look at what is happening in gold, but also in the bond market. I think Mr. Trump bullied the world on April 2nd, and he was then bullied by the bond market into backing away. And this sell the U.S. trade and buy the gold is probably one such consequence where the market is telling Mr. Trump, you can dictate all you want, but we're going to vote with our feet, and this is what the market is doing. And I think today it looks like gold is the only trade in town. There's very credible, fundamental analysis by specialized funds and analysts who believe we are at the onset of the new wave in gold, another super cycle of commodities led by gold. And it's not difficult to understand why and to see this unfold. So yes, gold today is the only trade in town, and we've been pounding the table on this for some time, and this is now unfolding. So, let's again brace and see what comes up next.
Indeed. So watching to see what happens with gold. And going back to your point on the US dollar as well, a weaker USD would be a catalyst for a move higher in both gold and in oil, which is also interesting to watch. But walk me through where you think the USD is going to move from here, because this will also have significant implications for the GCC currency-pegged economies as well.
So Mr. Trump has the answer to that, right? Mr. Trump is trying to do something acrobatic. He's wants to see the dollar down, the trade deficit down, while the yields would come down, and he's putting pressure on the Fed now. And he also wants to preserve growth and the economic perspectives. I mean, never been done before, very difficult to achieve. If he thinks he can pull it off, the market is not agreeing. And there's clearly, from his perspective, an objective to bring the dollar down, to increase the competitiveness of the United States while we renegotiate the tariffs to sort of rebalance the trade deficit. He's effectively bursting the bubble. This is what Mr. Trump is doing. And again, kudos to him. He's had the courage to do something that nobody has had the courage to do before. But this comes at a cost. And if anything, we thought that the dollar was going to go higher. Now we think the dollar is going to go lower, probably, with all this motion, playing out in the market. But again, let's see. Many, many questions. Very difficult to predict what's going to happen next.
Indeed, and a lot of this is going to be policy-driven out of Washington, D.C. as well. Amer, can I also ask you, because we have seen calls for perhaps a shallow recession starting to ramp up, at least in the second half of the year in the United States, what do you think the impact is going to be for the Gulf? And is it right for investors to be pricing a recession in this environment? Is that how bad it's going to get, in your view?
So the difficulty is not if there's going to be a recession or not. I think, 50% of the credible economists in the world expect a recession. I believe there's going to be a recession. If you look at the U.S. Treasury spread, looking back since the 70s, this is telling us that a recession is upcoming. Many, many indicators are spelling out recession. So that's not the question. The question is how much of a recession. And if it's a mild recession, and if it's controlled, if it's something akin to what Jay Powell has been trying to do for the past 7 years on eggs and sort of, managing to get us out of that loop is one thing. But again, bullying the world and bursting the bubble is another bit. And I think the probability of a wider, deeper event has increased significantly since April 2nd. And this is my fear. And if there's a bigger event, everybody's going to suffer.